Greetings, everyone. This is Kuhan Vinayagasundaram, Chief Investment Officer and Portfolio Manager of 𝗙𝗃 Equity Fund, one of Sri Lanka's oldest equity unit trusts. This is the quarterly update for June 2026. Before we begin, let's go through some particulars of the fund. As of 30 June 2026, the fund's AUM stood at 624 million Sri Lankan rupees with an NAV per unit of 71.33. The fund's equity exposure stood at 90.1%. The fund had investments in 22 portfolio companies. In terms of near-term performance for the month of June, the fund gained 1.8% as against the ASPI's decline of 0.2%, resulting in an active return of 201 basis points. For the 3 months ended June, the fund gained 13.3% as against the ASPI's incline of 5.7%, resulting in a relative outperformance of 767 basis points. On a year-to-date basis, the fund has gained 7.9% as against the ASPI's decline of 1.6%, resulting in an active return of 946 basis points. Looking at longer-term returns, the 𝗙𝗃 Equity Fund has generated a compound annual growth rate of 32% over the past 5 years, as against the ASPI's 23.2%. This has resulted in an active return of 876 basis points on an annualized basis. And in terms of cumulative performance, the fund has outperformed the ASPI by 116.5% over the same period. In terms of monthly performance matrix, the 𝗙𝗃 Equity Fund has generated positive performance in 5 of the 6 concluded months in 2026. In terms of portfolio companies' earnings, 64% of portfolio companies grew earnings on a year-on-year basis. On a weighted average basis, the portfolio companies grew earnings by 21% year-on-year, and this was backed by a 29% year-on-year growth in top line. The portfolio companies continue to outpace the broader market earnings growth on a year-on-year basis. In terms of the leaders and laggards for the fund over the last 3 months, it was Dialog, 𝗘𝗂 PLC, 𝗦𝗫 Business Solutions, Digital Mobility Solutions, better known as 𝗃𝗵, and ACL Cables, which drove gains for the fund, which far outpaced the ASPI's 5.7% growth over the last 3 months. Dialog and 𝗃𝗵 benefited from strong top line and earnings speed, while 𝗘𝗂 and 𝗦𝗫 benefited from strong traction on their top line growth, as well as benefited from healthcare weakness. In terms of the laggards, it was Windforce PLC, Primeland Residencies, People's Leasing, Sampath Bank, and Commercial Bank, which dragged returns for the fund relative to the ASPI. Wind fell on a seasonally weaker quarter, while Sampath and Commercial Bank saw price declines following the stocks going XD in April. Meanwhile, PLR, although witnessed a 5% decline on a 3-month basis, is still significantly up on a year-to-date basis, and the stock consolidates some of those early gains during the last 3 months. In terms of seasonality, looking at the last 10 years of price data, ASPI has generally provided better returns in the second half of the year. And looking at the next 4 months, July, August, September, October, all of which have been positive months looking at last 10 years average monthly price data. In terms of key things that we're watching, the last 10 days of July is packed with some central bank meetings on the calendar. On the 22nd of July, Central Bank of Sri Lanka is expected to announce their monetary policy decision. We do not expect the Central Bank of Sri Lanka to make a move in this particular monetary policy announcement, given the 100 basis points hike that we witnessed in May. And on the 29th of July, the US Fed meets for their monetary policy decision. We will discuss a little bit more about it in the next slide. We will also be keeping a very close eye on the second quarter 2026 earnings, which will start in the mid part of July and run into August. This would be the first full quarter bearing the brunt, or rather seeing the full impact of the war between the US and Iran. And in the more recent days, we've seen another flare-up of tensions between the US and Iran. But as what we've done with the past few months, we would not focus too much on the headlines, but rather focus on the price movements of the underlying commodities, especially the energy-related products, crude oil, and the crack spreads between crude oil and other distilled products, to see if any of these headlines that we're reading makes, or rather disrupts, the balance that we've seen in the global energy supplies over the past few months. And as we speak, be it the crude oil or rather the refined petroleum prices continue to trade at a significant discount to the peaks that we witnessed in the early part of the war and in the early part of April before the ceasefire was officiated. Um, so that's what we would continue to focus on in terms of guiding our decision making. In terms of the performance of the ASPI and what we've seen on overnight liquidity over the last couple of months, we've seen a bit of lackluster performance by the ASPI from about early May till end of June. This is partly driven by a significant drawdown in overnight liquidity. As you can see on the chart to your top left, overnight liquidity stood in excess of 250 billion by mid-May, but however saw a very steep decline between mid-May to mid-June as the Central Bank of Sri Lanka absorbed dollars from the market, which resulted in, or rather sold dollars to the market, which resulted in a significant drawdown of liquidity. And this was done in order to defend the currency, or rather or kind of straighten out the excess volatility that we saw on the external front. The overnight liquidity sort of bottomed around mid-June, and we've seen it sort of reversing in the more recent weeks as the external pressures have eased off somewhat with the crude oil prices coming down in the more recent weeks. And this has also translated into a meaningful decline in market activity, as you can see with the ASPI turnovers also reducing in line with the reduction in overnight liquidity. But however, we believe as things settle down, as the Central Bank of Sri Lanka turns a net buyer of dollars again in the market, as they need to build up their reserve position, we will see a gradual and meaningful increase in market activity going into the second half of this year, especially if there is better clarity on the Middle East situation and on the outlook of oil. Um, and also another factor that may have played a part in the reduced activity or enthusiasm around stocks in the local bourse is the steep revision that we've seen in FD ceiling rates. So in the chart to your bottom left, yeah, we have compared the ceiling rates on FD products by licensed finance companies. And given the steep 100 basis points hike to the monetary policy by the central bank in May, and also because of the steep increase that we've seen in GSEC rates in the aftermath of, or rather, since the onset of the conflict between the US and Iran, we've seen a significant spike of roughly 150 to 200 basis points increase in FD ceiling rates. And of course, with 1 year ceiling rates moving up to 13%, we've seen some flow of funds between equities to fixed income, or rather, it has at least stemmed some of the flows of funds into equities. And this has also been, in our view, contributed to the reduced turnover levels that we've seen in ASPI. But however, we believe that once the initial transition of funds happen, as the earnings picture gets better in going into the latter part of this year, especially if there is, if crude oil continues to remain at levels that we've seen more recently, we believe that there could be a strong earnings recovery story, which would obviously support more activity in the Colombo bourse. Looking at the charts to your right, we are recording this on the 16th of July. Just a couple of days ago, the US CPI reports came out, and they came in much softer than the street expectations, be it both CPI as well as core CPI. And later on, the wholesale PPI numbers also came in much softer than the market expectations, which immediately resulted in some pricing out of rate hikes, especially the July meeting, but also the odds of a rate hike reduced in some of the subsequent meetings as well. So although the market still expects the Federal Reserve to hike rates in the last three meetings, the possibility or the probability of rate hikes have come down, which could be a positive thing for emerging market assets and frontier market assets, especially if inflation picture continues to remain soft moving into the next few weeks. Finally, for those who are new, the City Smith Equity Fund aims to generate alpha over its benchmark, the ASPI, with a medium to long-term investment horizon through active stock selection and cycle positioning. It aims to provide its unit holders positive risk-adjusted returns while limiting downside volatility through prudent risk management practices. Our investment strategy, termed the Quintuple Foundation, focuses on 5 quality-oriented factors, These are namely sustainable earnings and free cash flow growth, healthy margins and return on equity generation capacity, market leadership in terms of product differentiation, cost leadership, or the ability to price products that would generate healthy margins for the foreseeable future. uh, Management quality, we like companies that have able, nimble, and agile management teams, which we believe can create value over the longer run. And finally, valuation is key pillar of our investment strategy. We like investing in growth companies, but we ensure that anything we buy is not egregiously valued. So that's it from me this time. Thanks for listening, and I hope to talk to you all soon. Thanks.